I'm Yahoo Finance Executive Editor Brian Sozzi. You're taking a look at a live shot of the opening bells on Wall Street on this Monday morning. Deutsche Bank ringing the bell at the New York Stock Exchange to celebrate Hispanic Heritage Month. Fulton Bank getting things popping over at the NASDAQ. It's Fed week, of course, friends. The consensus view is that the Federal Reserve will cut interest rates for the first time in 9 months. Consensus view also holds that stocks will continue to rise because, historically speaking, stocks love rate cuts. You know what all this means? The market is set up for a letdown if these things don't happen exactly how the consensus expects them to. We'll set you up on this vibe very shortly. Let's check in with Yahoo Finance senior reporter Ali Canal at the NASDAQ. Ali, while there's a lot of focus on all things the Fed, I woke up this morning and I saw Nvidia popping on the Yahoo Finance platform. Not a good day for Nvidia.
Not a good day for Nvidia. Some weakness there after China called out that Nvidia violated antitrust laws. This comes after the U.S. and China are continuing to meet, trying to negotiate a deal, and Nvidia, as usual, is caught in the crosshairs of that. Nvidia shares are down roughly 1% at this point, off of the lows that we saw earlier in this session. We are seeing the major indexes all trading in the green right now. We have a nice pop in the NASDAQ Composite, up around 0.4%. Same with the S&P 500, and the Dow is up roughly 100 basis points. Now, I talked about Nvidia. Related to Nvidia is CoreWeave. We got some breaking news just a few moments ago that the company announced a $6.3 billion cloud capacity deal with Nvidia. You will see CoreWeave shares popping on the heels of that deal. Even though Nvidia is down today, CoreWeave is up roughly 6% at the opening bell. Now, CoreWeave rents out Nvidia's AI chips, and that helps the company with AI workloads. And it's become one of the chip makers' key cloud partners, and just underscoring really the massive demand for GPU computing. And then also on the NASDAQ, helping lift the broader index is Tesla. We are seeing shares up around 6%. And this comes after CEO Elon Musk revealed that he bought $1 billion in shares on Friday. This is the first time that he has bought shares of Tesla since 2020. It's something, Brian, that we'll be talking about throughout the show here, but you're seeing a nice pop with Tesla shares up 7% this morning.
All right, thanks so much, Ali. Appreciate it. All right, here's what I'm tracking in the markets right now. Reading the Fed tea leaves. Federal Reserve is widely expected to cut interest rates for the first time in 9 months when its meeting concludes on Wednesday. But there are important under-the-radar aspects to Fed Day investors need to watch out for. For starters, there could be 3 members calling for a 50 basis point rate cut, aka a jumbo cut, and possibly 1 or 2 voting for no change at all. It has potential to be the first meeting where 3 governors dissent since 1988, and the first with dissents on both sides since September 2019. And 2, it's unclear if Fed Chair Powell will signal a steady drumbeat of rate cuts into year-end. Here's what Goldman Sachs chief economist Jan Hatzius has told me about the path of rate cuts.
If they do 25 basis points, I would expect them to signal clearly that there's going to be a series of cuts. I would also expect them to signal clearly, as Governor Waller did on Friday, that they'd be very willing to scale up the pace if the data disappoint. So it's, I think 25 is defensible. 50, you could certainly make a case for, but more likely 25.
No breaks for Nvidia in China. Nvidia shares under pressure as China will carry out a further investigation to the market darling after a preliminary probe found that it had violated China's anti-monopoly law. Nvidia was found to have violated the terms of China's State Administration for Market Regulation's conditional approval for the acquisition of Israeli chip designer Mellanox. The news likely means Nvidia won't be able to sell its hardware in China in the near term. China remains a very important market for Nvidia, as CEO Jensen Huang told Yahoo Finance just a few short weeks ago.
Every American technology company, for every American technology company, China is important to have. It's an important market. It's also, as you know, it's just really large. It's the second largest computing market in the world. I'm just delighted that President Trump sees the wisdom of American leadership, and particularly at this time where AI is taking off. It's vital that America wins the AI race.
Here in the opening bid roundtable, Ritholtz Wealth Management Chief Market Strategist Callie Cox and Yahoo Finance Senior Reporters Ali Canal and Nez Foray. Callie, let me kick it off with you here. What is the best case scenario following this Fed meeting?
Well, I think the best case scenario is better economic context. So what I mean by that is I think we're getting a 25 basis point rate cut on Wednesday. Like Goldman's Jan Hatzius said, probably 50 is probably in the cards, but I don't think that's what you want to see. I think that could be an appropriate response, but that probably signals that we have a weaker economy ahead of us. All in all, stocks do better when the economy and earnings are growing, and you don't want to see rate cuts when the Fed feels forced to do it. I'm afraid that we're in that position right now.
Callie, do you see this? We're likely to get this rate cut. Does this open the door for a series of rate cuts through the early part of next year, you think?
It might, but I think that outlook is a little tricky for a few reasons. First of all, inflation is growing, inflation is reaccelerating. The Fed's two jobs are to keep a handle on price stability and to promote maximum employment. Obviously, they have problems on the job market side, but with inflation, the data is not really working in your favor. And optically, I think a series of rate cuts could be hard. Will they do it? Maybe, especially because Fed membership has shifted a little bit. And like you mentioned, there are going to be dissents. But I wonder if the market is maybe getting over its skis and how many rate cuts we can get and the context behind those rate cuts.
Al, you crunch a lot of numbers on economic data. I mean, it's been all over the map. You have weakness in the labor market. You have the CPI came in hot-ish, and now everybody's expecting a series of rate cuts from the Fed.
Right, and that's the danger, right, Brian, is you have this potentially stagflationary environment. You have a time when the Fed is expected to cut interest rates into sticky inflation. You did see some of the tariff impacts start to creep up in those consumer prices. But as Callie was laying out, you also have this weakness in the jobs market. We had 1 million fewer jobs added to the economy in the 12 months through March. You have jobless claims reaching its highest level in 4 years. And younger Americans especially are pretty squeezed with the current labor market because we are in this low hire, low fire environment. And even though the unemployment rate is low, we have those immigration policies complicating the outlook there as well. So the Fed is in a very difficult position. There is that 25 basis point cut that's been priced in for quite some time now for Wednesday. But as Callie was mentioning, I think the future remains uncertain, and how stocks react also remains uncertain. We've heard different types of scenarios on the street. So JP Morgan, for example, saying that we could have a sell the news event where stocks maybe potentially waver after we see that rate cut. And then Yardeni Research came out and said we could see maybe a melt up in stocks, and that could fuel a lot of speculative trading and some FOMO reaction on the markets, and that's not really being driven by the fundamentals. And what happens when we see a melt up, we usually see a sharp correction after. So there's a lot of things floating on Wall Street, but what strategists seem to be hanging their hat on is the fact that we have earnings that are strong, we have AI tailwinds, and with these expected rate cuts, that's only expected to further fuel a lot of the earnings momentum that we've seen.
And as one of the things that I learned early on in my career when I would go by my boss's desk begging for a raise, I mean, we all want to make some more money. He told me, Brian, don't fight the Fed. Don't fight the Fed. And I have kind of adhered to that. Not that I'm out there, aggressively buying stocks. I'm not, but I'm just saying I have tended to believe that more often than not.
Yeah, that's right. And the market will be really looking to see what the Fed says about future cuts, as we were just talking about. Look, everyone's expecting a 25 basis point cut. Trump wants a jumbo cut. We'll see what Trump says after whatever the Fed decides on. But nevertheless, the market will be wanting to know what happens in the next coming months, and especially how the Fed sees the deteriorating labor market. Does that deterioration outweigh the sort of reacceleration that we've seen, or the sticky inflation that we've seen recently? And don't forget that there's also the question of Fed independence. So there's a lot for the market to digest in this week, and whatever the Fed is talking about as far as what they see for the future, that may be what the investors trade on.
Also, over the course of my career, Callie, I've written a lot about how earnings season needs to just evolve and how companies report, whether it's their earnings or their conference calls. It needs to change. It's just too much, and it's not really helpful in many cases. President Trump out with a post on Truth Social this morning suggesting, there's the post right there, we move away from quarterly earnings. As someone in financial services, would semi-annual reporting be good for the industry and good for investors?
Well, I'm a big believer in transparency, so I think this would be better for companies than investors themselves. I also love rifling through data, so obviously I'm biased here. But I agree with you. I think something needs to change. Guidance seems to be a bit of a game among companies these days. And I'm not sure what that answer is, but I don't think it's reporting less. Of course, for companies, that means lower costs, a lower compliance burden. That could mean good things for the bottom line. But I think ultimately investors and, markets and the efficiency of markets thrive on transparency, and to ask for less of that could be a net loss for all involved.
But Callie, would this perhaps make investors think more long term, instead of like buying a stock 2 days before a company reports earnings, hoping it beats by 20 cents?
I don't think so. I think that genie's out of the bottle. I think markets have evolved in a way that allows investors to speculate as they see fit. I think investors are becoming more sophisticated too. So, the news flow will keep coming on no matter how much companies report. But I think that company reports are a good stake in the ground that you get quarterly, especially with guidance, that are really important, especially around more chaotic times like Q2, for example. I think about how markets could have reacted or how investors could have kind of spun up narratives without Q2 earnings season. And, that goes back to the importance of hearing from companies quarter by quarter and having them put truthful numbers out in front of us.
Allie, I think we could agree, though, earnings calls generally are dreadful. Very few companies do it right. One company I think does it right is a company like PepsiCo. They go right to analyst Q&A. I mean, most of these guys and folks are hopping up to these earnings calls, Allie, just reading off pre-prepared scripts that take up 30 minutes, and investors and analysts get no questions.
I agree, Brian. And as someone that has to sit through many earnings calls, it's very interesting to see how different companies do those. Netflix, for example, they release a video and it's all on camera, and they do really dive into those questions right away. And I think that's key. There's questions that shareholders have. There's questions that analysts have. That gives a lot of the rich context around some of these numbers, because at the end of the day, earnings are telling a story about the company. And as journalists, as reporters, our job is to really decipher what that story means for the investor. So I think that the more data and the more color and the more context we can get on that, the better. And I'm all for revamping the typical earnings call. I
feel your passion for corporate earnings. And as last word to you, I hope none of these changes were to come through before Nvidia reports third quarter, because we need to see what is happening with China now. Not in their guidance. People question them not building in China guidance for $2.5 billion to $5 billion in China sales in the third quarter. But I want to hear from this company, given what we're learning now today from Nvidia.
Most certainly, and I think that the smartest thing that Nvidia could have done was not include China in its sales guidance, because of what we're seeing now with China announcing that it's this investigation that it's had launched last year. But certainly the developments that we've seen today with Nvidia and with China just shows that China is still a pawn in this sort of trade negotiation between the U.S. and China. And look, the stock reaction, if you take a look at the stock reaction, it's not reacting that much. I mean, it is down 1%, but this sort of means that the market knows that this is part of the negotiation that's going on right now. And the fact that it didn't include China in that sales forecast, that was a good thing.
All right, my opening bid roundtable is hanging with me because we had a lot more to get to. Straight ahead, Apple's new iPhone may be off to a respectable start, and one Wall Street firm has made a case for a doubling of Oracle's stock after its blowout quarter and guidance. Speaking of earnings, we'll be right back. Welcome back to Opening Bid. Step aside Nvidia. Wall Street has a new favorite, and it's Oracle. I continue to be amazed by the degree of bullishness on Oracle that has flowed from the company's huge earnings day a week ago. It's as if analysts forgot the company existed, and now they have to play catch up to the AI story. Oracle billionaire founder Larry Ellison is out there pitching. Suffice it to say, a new Oracle note from Jefferies analyst Brent Thill today caught my attention. The longtime tech analyst doesn't rule out Oracle stock reaching $600, which would be about double today's price. Oracle is emerging as a frontrunner in the AI cloud era, says Thill. Thill notes that Oracle now commands about 40% market share of backlog of hyperscalers, which is a leading indicator of future revenue share. All right, Apple gains opening bids stocks of the day status. Here's why. Apple announced the iPhone 17 series on September 9th, and the iPhone was available for pre-order on September 12th, with general availability beginning on September 19th. According to new JP Morgan analysis out today, lead times for delivery are indicating that demand for all the new variants launched on September 9th is tracking ahead of the iPhone 16 series during week one. Higher demand is being seen for the base version as well as the new Air model. Again, it's way early here for the iPhone 17, but it's a positive read for the Apple bulls, who are growing worried about the phone's lack of wow-worthy AI features. Having said that, Apple does need to pick up the pace badly on AI if it wants to keep iPhone sales brisk. Here's what AT&T CEO John Stankey told me about the iPhone 17.
Customers seem to be indicating that they would expect more to motivate them to want to buy and use it. Whether or not they get the magic dynamic here, as I said last year, I think it's going to be more incremental as they improve, as they move along, and then one day you wake up and say it's indispensable. It happens slowly over time. It doesn't happen in a flash. And I think that's the path that Apple may be on, and whether or not they come up with the right applications that make it more indispensable and Apple AI unique to other AI tools or other AI devices remains to be seen.
All right, still on the opening bid roundtable, Inez Ferre, Ali Canal, and Callie Cox. Inez, I'm coming over to you here. Look, there was a lot of concern about these iPhones falling on really deaf ears, that nobody was going to upgrade because they didn't really have these wow features, but at least some early analysis, perhaps that is not the right assessment.
Yeah, I mean, the early analysis is showing that demand seems to be tracking better than the iPhone 16. And this is early analysis, of course, but also that the base model is outperforming as well over the Pro model. So that's interesting as well to see that consumers are gravitating more towards that base model. But perhaps the difference between the base and the Pro isn't enough for them to go over to the Pro model. But still, nonetheless, this bodes well for Apple. And if you take a look at Apple stocks, I mean, it's up 36% from its April lows. It's still a laggard among the Mag 7, as you pointed out, AI still being that theme that Wall Street wants to see more of.
And as viewers want to know, which model do you have? Did you get a new model?
I've got such an old one. I haven't switched mine in like 3 years.
And then switch, the battery's going to stop working. Come on, let's get a new phone. Ali, I know, I suspect maybe you pre-ordered your new phone, but you can't be bullish on Apple here. I get the data has been positive, at least initially, like JP Morgan says, but you can't detach from the China story on Apple, given everything going on in the trade war.
Yeah, and Apple's been trying to diversify where it sources the iPhone, where it manufactures the iPhone. When you look at India and some other countries that they've been really doing since that first trade war with President Trump a few years ago. And they're also really doubling down on their U.S. investments. We've seen Tim Cook visit the White House several times and try to cozy up to the president, which really seems to be key if you want to be a successful tech leader in today's landscape, especially with all the uncertainties surrounding trade. We were just talking about the AI narrative, and comparatively to a lot of those other tech companies, Apple has aggressively lagged. At the same time, though, I thought the comments made by the AT&T CEO were very important, because that is sort of Apple's MO, right? They are slow to the game. They really wait things out, and then they come out ultimately with the better product that you just can't avoid and you have to have. So maybe that is something that investors can really latch on to, the longer term story for Apple. AI is not going away anytime soon, but right now we're in an environment where we're seeing some of these AI returns very aggressively for certain companies, your hyperscalers, Nvidia in particular, and Apple's just not there yet. I think they will be, but you have to have a little bit of patience. And we know sometimes patience for investors, it takes a minute there.
Definitely does. Callie, do you view Apple as a growth stock? Would you put it in that growth stock bucket?
You know, that's a funny question, because 10 years ago, I'd say yes, unequivocally. Right now, it's kind of sitting on the fence between growth and value, depending on how you value at the moment. I would say this. So Apple is obviously way behind in AI. It's very exposed to the tariff story. A new iPhone comes out every year, and it seems like this version of the iPhone could pick up, I think your word was, a respectable amount of orders. That could very well be true. But you have to take a step back and understand what the growth story is right now. Investors are looking toward AI as the next phase of growth for big tech companies. Apple's biggest segment of revenue by far is the iPhone. So this could provide a solid base for Apple, but does it really whet the appetite of investors looking for growth? I don't think so. I also don't think that that's a horrible position to be in right now, because at the moment, with the economy weakening, with rates coming down, and probably a lot of speculation around where the economy could be going, I think it's a point where you should be leaning on value and you should be taking profits from those more hot growth stocks that have done well as of late.
Good point indeed. All right, when billionaires bet on themselves, a charge has been sent through Tesla stock on news Elon Musk bought 2.57 million shares at various prices on Friday for a total of about $1 billion. Purchases are rare for Musk, who last purchased $10 million of Tesla shares back in February 2020. So my question of the day is this: if Elon is buying Tesla, should you? Inez, I got a good note from William Blair analyst Jed Dorsheimer just now in my box. He says these buys are a clear sign of confidence by Musk in the outlook for Tesla.
100%. And it's a sign that he is all in, especially after the company's board proposed that massive pay package with some really lofty targets in there. So the fact that he has bought these shares is a sign of the big vote of confidence for Tesla, and a sign that he is totally ready to go all in.
Ali, if Elon was on this panel today, if he actually just popped up on screen, I would ask him this: are you buying this stock more so on a play on robo-taxis and robots than the traditional car business? I think it's a question worth asking for. I personally think he's buying this as a play or bet on robots taking over the world and the industrial community.
Yeah, I would agree with you there, and that's what Wall Street has said as well, right? Tesla is a longer-term story. We were just talking about Apple maybe being that longer-term story when it comes to AI. I think Tesla is that play that you want to be exposed to when we do have that autonomous driving really start to pick up, the robotics, everything that you were just mentioning. That is where all the Tesla bulls have really been focused on over the past few months, even as the stock has struggled in the short term. The car business, it's just lagged. It's not doing great overseas. You have a lot of that competition. Here in the US, the infrastructure is just not fully there yet for widespread adoption. And then you have the expiration of those EV tax credits. That's been an overhang on the stock as well. But if you look out to the future, there are a lot of tailwinds. There are a lot of potential catalysts. And to Inez's point, this shows Elon Musk is all in. Before, shareholders were getting a little nervous that he maybe had his hands in too many things that wasn't totally focused on Tesla. I think this can give shareholders the confidence that he is committed and he's looking out to the long term here.
Callie, last quick word to you. When an insider buys or sells, what does that mean to you?
Well, I'm going to be repeating here, but I think it's a show of confidence, especially with a company that is so founder-oriented and so leader-oriented right now. And I'm not sure if this has been mentioned yet, but Elon hasn't bought shares since 2020. So that probably gives you some indication of how he feels about the stock going forward. But I go back to my earlier comments here. Tesla is a growth stock. I would definitely put it in the growth stock bucket. Is it a time to invest in growth? I'm not so sure, with the economy slowing down. So this might be more of a temporary pop.
Big thank you to my contributors on this Monday morning: Callie Cox, Ali Canal, and Inez Ferre. Really appreciate it. All right, Sharon Head, Julie Hyman has you covered for Market Catalyst. We'll be right back.